is that it's going to be a huge benefit for the banking stocks. That's of course because they are the most liquid, Axis and Yes Bank. But you must expect an equal amount of surge in other sectors like rating agencies, and I would assume defense as well. If FDI can be replaced with FII, then the FDI 49% cap will also be available to FIIs. Now, obviously, the details will come from the DIPP, as the minister said. One doesn't know if that will therefore postpone the applicability, but to be sure, warehousing of these shares will start. We are seeing Axis Bank run up 3.7%, Yes Bank as well. Those are the immediate two gainers because of this. Okay, we have Mr. Dinesh Kanabar online. Mr. Kanabar, thanks a lot for joining. This is all we got from the minister, that the individual caps of FII, FDI, NRI will now be merged into a composite cap. How do you read this? Who will be the sectoral beneficiaries?
So I would like to believe that across all sectors, wherever there is no sectoral cap today, we are now breaking the barrier between FDI and FII. You could have done that in any case by passing a board resolution, which some of the companies did. But in effect, what we are now saying is that in sectors where 100% FDI is permitted, you could actually have a 100% FII holding, which is absolutely a very, very welcome step.
Okay. You will not want the individual boards anymore to say that we are raising the FII cap to 31, 41, 51, as the case may be. That will no longer be needed.
Because it's a single cap, and in bulk of the sectors, Lata, as you will appreciate today, there are no sectoral caps at all.
Yes.
So if you take away the things like defense and telecom and whatever else, very few sectors where caps are remaining, you can do 100% FDI, and if you can do 100% FDI, you have 100% FII as a matter of course.
Okay. Mr. Kanabar, one argument against it is that portfolio money is hot money and seems short-term in nature. Would that be a worry?
So even today, and I was just sharing, Lata, as I was being plugged in, that today you could do a warehousing with somebody else.
Absolutely.
So if you really wanted to do hot money, you could do a warehousing. Rather than have people do circuitous route, why not have a straightforward thing? And if you wanted to look at hot money, and if you wanted to put certain safeguards in place, find different ways of those safeguards rather than just talk about getting worried and have these multiple caps. Okay. I think it's a streamlining measure, which is very, very welcome.
Mr. Kanabar, see, for defense, we allow 49% FDI. There is no mention of FII. Now that would be assumed?
I would think so. Subject to looking at the policy note, I would think that it is so. Defense actually is something very interesting, since you mentioned, Lada, because that's the only sector where you have 100% investment by NRIs, which is a very odd one out there. So there is nowhere else where you have a separate cap for NRIs and foreign investors.
Okay.
So it will be interesting to see what happens to that.
And actually the finance minister mentioned, and he's a lawyer par excellence, he specifically said NRI. One would have thought he would say FII, FDI. He said the composite caps of FII, FDI, NRI are being merged. He didn't mince his word there. So we should take it as a done deal, no?
So if that is so, it would be interesting to see if this is a backdoor entry to FDI in defense as being 100%, because NRIs, I don't think so. I really don't see it will come in such a roundabout manner or a surreptitious manner.
Okay.
But it will be just interesting to see that if NRIs can invest 100% into defense, and you now have, to your question that yes, FDI 49, therefore FII 49 in defense should be a logical consequence.
Yes.
I would be wondering, and maybe once I have a look at the note as to what does this do to NRI holding.
No, we obviously don't have a note. We only have the verbal pronouncements of the finance minister.
Yes, Mr. Kanabar, if you could just stay on. We've got other experts also joining in. Rajan D. Gupta, the partner at SRGR Law Partners, is here with us, and Mr. Dogra of CARE Ratings is also with us. Mr. Dogra, if I could come to you first, I believe your company would be a beneficiary. If you could take us how?
Rima, I think we have already, decided to have 74% investment by foreign institutional investors. So we are already at 25%. So I don't think it makes any change on us. But there's already big limit, which already has been approved by shareholders. So, but certainly overall, it's a very, very positive step, because the ministry proposed to do away with different kind of limits for overseas investment, and certainly it brings out clarity in the norms.
Okay.
It will also provide Indian firms an investor option in various categories, whether FDI or FPI, NRI or foreign venture capital investor.
Okay.
Certainly, as Minister in the budget has spoken of improving ease of doing business, I think this is a step in that direction.
Okay. Well, actually, is there any cap at all for rating agencies? Mr. Rajan Gupta, if you can come in on that. Rating agencies, I think, have no cap at all. So if
yeah, they don't have any cap, because rating agencies are treated as service providers.
So as Mr. Kanabar says, now if whether the CARE board agrees or not, FIs can buy any amount of CARE shares?
Yes, this is what the intention appears to be, though we need to look at the fine print in the press note or the circular which is going to be issued.
Okay. Mr. Pranav Satya, the tax partner at EY, Ernst & Young is also with us. Mr. Satya, this is the one sentence we got from the Finance Minister, that FII, FDI, NRI, these individual caps will be merged into one composite cap. Your first thoughts, sir? Beneficiary sectors and incidental problems.
So I think it's a great move. It's an implementation of what he had promised in his budget this year. And I think it will certainly provide much greater flexibility, simplify things, make it far clearer, bring in certainty and improve ease of doing business. Potential sectors, I think, for example, in commodity trading, in power exchanges, for example, in power exchanges, the current sectoral cap is 49, but there's 26% for FDIs, separately 23% for FPIs. One of the caps is exhausted or fully utilized. For example, in a company, let's say 26% FDI is fully exhausted. And there is an unutilized portion in the FPI of 23%. That certainly now opens up far greater flexibility for bringing in fresh investment.
Yeah, sir, Mr. Satya, in those areas we are clear. But Mr. Kanabar and Rajan Gupta are raising other issues, and that's very intriguing. One, in defense, 49% FDI is allowed. Should we therefore assume FII guys can buy? In defense again, NRIs can buy any amount, even 100%. Since all caps are one, can FIIs and FDIs buy 100%? So by default, FDI specifically mentioned 49% in defense, technically becomes 100%.
So I think we need to see the exact provision or the fine print, but I would not feel that it would be across the board. At the same time, if he does say that the distinction between FPIs, FIIs are being removed, FDI and FPI investment is being removed, that at least should go away. I'm not so sure when it comes to sectors where there is only NRI investment being permitted, whether that too would be completely opened up. That kind of across the board may not be very easily palatable, but we have to see the fine print.
Okay. Mr. Saita, would it be true in the case of private financials, while you'll do away with the sublimits, you'll only have a foreign composite cap of 74%, but for any stake, if it goes above 49%, you will require still an FIPB nod?
I don't think that goes away. So the fact that the automatic route approval window is up to 49%, and an automatic route window is up to 49%, and the balance is approval route or the government route, that piece will continue. It's only the sub-limits for FDIs, FPIs that goes away, I would feel.
So the private sector banks will have to go at 49% to FIPB.
I think that stays as is.
Yeah, obviously that's not been touched, so it, I guess, will remain in place. Rajan Gupta, any further comments on which sectors are likely to benefit, or where we might see legal tangles?
It would definitely give a boost to structuring, capital structuring possibilities, because earlier you had sub-limits prescribed for the foreign investment coming through FPI route, and so therefore now once such kind of caps are being combined together, then obviously it will give a lot of flexibility in terms of capital structuring for the purposes of bringing FDI into companies.
Okay. Sectorally, who do you think, who were you saying will benefit?
Definitely defense sector is one sector, and then you have got telecom, probably insurance as well, and the broadcasting and print media.
Insurance is 49% FDI. But that is foreign, isn't it? It's FDI and FII.
Yes.
So that is already being treated that way, isn't it? Does it have any specific benefit? Even now it is treated as 49% foreign.
Earlier what you were having was FDI, FII, FPI plus NRI up to 26%, which was under automatic route, and then you can have, you could have, got government approval for the further limit up to 49%. So now probably, that kind of confusion which was there, whether FPI can also invest beyond 26% after taking approval or not, that will go away.
Okay.
Mr. Kanabar, do you see any challenges to this proposal?
I really do not see any challenges to the proposal. I would in fact see this, that there has been a commitment of ease of doing business. India wants to get into whatever, we have heard different things, top 100, top 50, top 30, whatever. This is definitely a step in that direction, a very welcome step in that direction. Because every time you're making an investment, if you have to think of what structure you need to put in place, I don't think that's a very healthy sign. And therefore, I think this is a very, very positive step in that direction.
Where do you see, since you speak to a lot of foreign clients and lawyers, Mr. Kanabar, who would be the immediate beneficiaries you think where money is just waiting to rush in?
For example, defense really would be the one, because that's a sector where huge amount of activity is happening. Make in India is happening. You did not have the ability. So I think to make comments on a particular sector may be sort of generalizing too much, really.
Okay.
But really defense is really one very huge opportunity which one can see out there.
Okay. Well, all these defense-related companies are doing exceedingly well. Look at Walchand Nagar Industries, that's up by 5%. Astra Micro too has shot up post this news. So defense is clearly reacting.
We want to put CARE, MCX and those kinds of market infrastructure companies as well. They were the guys with separate caps, and a composite cap might mean a little more activity there. Look at CARE jumping up. I would assume it would be there in the other areas. Mr. Saita, if you have mulled over this FDI, FPI, NRI for a bit more, your sense of where might be the ambushes, where might be the benefits?
I think defense, I agree, would be one. Infrastructure companies in the securities market might be the other.
Infrastructure in the securities market would mean, you mean the CARE rating varieties?
Correct.
Or the exchanges? Okay.
Correct.
Okay.
Correct.
Yes, sir. Then which else do you think?
Those, I think, and power exchanges, probably. I think those might be the sectors which might be best benefited.
Okay, but we get into some legal tangles in any sector?
Not anything that immediately jumps to mind. We have to wait and see what exactly the DIPP press release says.
Okay.
All right, we'll get in another expert, Pratibha Jain of Nishith Desai Associates, joins us all the way from London. Hi, Mrs. Jain, thanks so much for joining in. What would be your initial reaction, and which sectors will be the key beneficiaries?
So obviously this is very positive in our view, because it goes in line with liberalization and ease of doing business. The variations in the FDI policies for the composite, for the caps of 23-26% didn't really make sense, because you do have the individual limit for FPIs. They can't individually hold more than 10%. So that kind of helped ensure that there was, no major aggregation by a particular FPI. In terms of the sectors that benefit, as the previous speaker said, the market infrastructure companies, the stock exchanges, the power exchanges, commodity exchanges, CICs, defense, these are all the sectors that still had the 26-23% distinction. There are certain legal issues to be kept in mind. I think, the way this gets worded is going to be very important.
Yes.
And, what grandfathering and how do you transfer over the regime is also going to be very important. For example, in the stock exchanges, the FIs were not allowed to have a vote seat.
Yes.
So now that there is a composite cap, hopefully that means that distinction goes away. So, really the devil, you'll have to then accordingly amend the SEC regulations. So, there's always a stitch to be made in various other regulations that, can
I take your point. That's really interesting.
Good.
That's interesting. Mr. Kanabar, you want to come in on what Pratibha is raising as an issue in terms of board seats? As well, would you say that the whole perception improves? Does litigation decrease? Mr. Kanabar, you can hear me? Okay, all right, let me get to Hitesh Jain, the senior partner at ALTM Legal as well. Hitesh, if you've been listening to the conversation, the appearance is that there could be an issue of board seats for FIIs in some sectors. What's your first take? Could litigation be a lot less? Could Indian perception of doing business in India be a lot better?
I think so, because the whole idea, we have already seen that composite cap was already applicable in sectors like telecom, insurance, and defense, basically. So the demand was that if you can have in case of all foreign investments, if you have this, if you have a composite cap, then basically it gives clarity and it supports the efforts of the government, where they're talking about ease of doing business and make in India and all.
Okay.
So from all this perspective, if you look at from overall, it just gives a clarity basically, and it simplifies the procedure.
Okay.
And second thing is, I think it will enable the Indian companies also to attract investors also at the global level. So it makes India as an attractive place for the foreign investment.
All right. That's a lot of positives we've got from all of you gentlemen, Mr. Saita, Hitesh and Mr. Kanabar. Thank you very much for joining us. We also have Rajat Monga, the CFO and Senior Group President of Financial Markets at Yes Bank, joining us. Rajat, you must have seen that one-liner from the Finance Minister. How does life change for you?
Well, Ada, yes, I think life only changes for the better. I mean, as some of the speakers have also been mentioning here, I think it's a very pragmatic movement as far as the government is concerned on this step. And I can speak for the banking sector, where foreign capital is very integral to the growth of the country, for banks to raise more capital and be able to support the banking needs of the domestic clients as well. So the structure earlier was that banks could be at 49% FII or FPI ownership, and you would have possibly covered that on your channel several times, that many banks have reached their limits or are close to their limits, while FDI had always had a limited application in the banking sector, because RBI on one hand reduces single ownership to 5% in any bank, and on the other hand ADRs and GDRs also would qualify as FDI, wherein the intern holders of the GDRs and ADRs might actually be the same investors which are holding directly in the Indian stock market holdings. So combining the two limits, I think, is a very very good step. I mean, it suits the banking sector tremendously. Banks have been slowly being taken out of the MSCI for the reason that the available ownership in the index was the criteria. Now, if you look at Yes Bank, for instance, we have a 44% FII ownership, and that's the only foreign ownership we have. Now, this opens up the ownership for foreigners in the bank to as much as 74%. And we had sought our shareholders' approval to raise our FII ownership to 74%.
But I believe even now you will have to go at 49% for FIPB approval. I don't think that has been changed.
Yes, it's quite possible. So there is a FIPB approval, which is when we were in foreign ownership design, there was an automatic foreign ownership allowance till 49%.
Yes.
However, there may or may not be. I'm not sure. We'll have to read the circulars fully. But there may or may not be. It'll be hard to implement it because you can't control then the ownership in the markets as it is moving. So very likely the government will also have to look at that also on a relaxed structure. Because these are all public market investors.
Okay. Mr. Monga, if the FI investment or the foreign investment in the bank does go up to 74%, what would be roughly the weightage of Yes Bank in MSCI?
Well, I don't have the mathematics in my front. We haven't done that maths actually. But if you look at most banks in India, we should have one of the highest allowance which is available from existing ownership to 74%. So it will be also weighted by our or each bank's respective market capitalization as well. But my guess is it should be we should be a very I would say we should be in the forefront of that benefit as far as the inclusion in MSCI is concerned.
Yeah, are you all tapping the markets? Any QIP or anything coming?
Well,
it will be a great time.
Well, there is, let's say, there will always be a capital planning thought process. So we have taken board approvals and shareholders approvals in the last AGM to think about a capital raising of up to $1 billion. While there is no imminence in terms of the transaction is not being lined up, but yes, this current sort of liberalization by the government also opens up the options in terms of that capital raise. Because let's say, like we were at 44% foreign ownership. So if you have to think of now diluting, we have to also worry about whether FII limits will get used. Will there be available headroom after the new issuance?
Okay.
And now we can think about that a little bit more liberally. So earlier we may have been compelled to look at a ADR or a GDR, an ADR in our case, because that is FDI. So we will be splitting our listing on two stock exchanges. While we can still pursue that for the right reasons, but at least it is not. We are not being forced to export our capital markets to some extent because of that sort of compulsion. So I think it's a good development for our capital raising plans as well.
Okay. Well, we'll leave it at that. Rajat, Monga, pleasure speaking with you. So that's one of the likely